All right, hello and welcome to Camel Finance. I'm your boy Camel, and last week was a big week, right? We had the US judge rule Ripple XRP was not a security. We had US inflation fall to 3% below expectations. Europe is launching its first spot Bitcoin ETF this month. The former SEC chairman says that Bitcoin spot ETF should be approved. We had Coinbase relist XRP. 9 trillion asset manager BlackRock said that crypto will transcend international currencies due to global demand. The SEC acknowledged BlackRock's spot Bitcoin ETF application. The SEC also acknowledged Fidelity, VanEck, WisdomTree, and Invesco's spot Bitcoin ETF applications. We had Bank of America ordered to pay $250 million for charging illegal fees and opening credit card accounts without customer consent. And we had the Australian Securities Exchange receive its first Bitcoin spot ETF application. We also had Binance come out and officially integrate Bitcoin Lightning Network. So better late than never, but this is likely a trend that's going to continue. We also just set a brand new 5-year low for the balance of Bitcoin on exchanges. As you can see here, more and more of this Bitcoin supply is being taken out of the system and cold stored for longer term holding. And speaking of supply dwindling, in just 20 years, the new Bitcoin supply will shrink to 14 Bitcoin a day. Now, I actually checked the maths on this because I thought that this seemed too low to be true, but this is actually correct. At the moment, 900 Bitcoin a day come out via mining Bitcoin. In approximately March of next year, when Bitcoin undergoes its halving, that will be reduced to 450 Bitcoin. And then every 4 years from there on, we will see the number of Bitcoin that come out per day via the miners halved again and again and again. And the maths is correct. In 20 years' time, the number of Bitcoin issued per day as a result of mining Bitcoin is going to be just over 14 Bitcoin per day. So assuming that the hash rate is still equal to today and the total computing power does not move for the next 2 decades, the cost of electricity or mining for producing 14 Bitcoin a day puts us at around $4 million a coin. So this is a very, very conservative estimate since we are seeing the hash rate double every 12 months. And of course, computer power is likely to massively increase in that time frame as well. So we could well be looking at multiple millions of dollars per Bitcoin in the next 2 decades. And if you think that sounds crazy, then have a look at this, because if you're wondering why the high interest rate environment and Operation Choke Point 2.0 has suppressed Bitcoin adoption temporarily or permanently, even if permanent, Bitcoin is still sustainably above 1 million by 2030. Otherwise, we could see it as early as 2029. So the $1 million Bitcoin price is coming, and it might be a lot sooner than many people realize. The news keeps flowing because Indonesia is now ready. They're about to make a groundbreaking move in the crypto space with the launch of its own national crypto exchange. I'm not going to go through the thread, you can read it in your own time if you want to, but essentially what they've done is they've sorted through a bunch of regulatory frameworks and are now ready to truly implement Bitcoin and cryptocurrency. So the long and short of it is Indonesia is now ready. I found this and I thought this was interesting. Notice how we go up in 2 waves and then we break and make a parabolic advance. We go up in 2 waves and then we break and make a parabolic advance. We did the same in 2020, and now the setup seems to be mirroring what we've done previously. This fits in with my current expectation that the market is going to put in an all-time high this year. So can this continue? That is, of course, to be determined. If you've been on this channel before, you'll know I regularly beat the same old drum over and over again, and that is that this story is one entirely of liquidity. You can see here, all of these are the central banks, and in blue here we have the combined M2 money supply for all of these central banks. What you'll notice is liquidity is ticking up again. What you'll also notice is the bottom came in for the tightening portion of the cycle right around the time Bitcoin made its lows, and given that liquidity continues to increase, and I believe, as I keep saying, this is a story entirely comprised of liquidity, it's reasonable to expect higher Bitcoin prices in the not too distant future. And speaking of liquidity, it doesn't even look like there's ever been a halving that drives the bull market. I know this is consensus. I know a lot of people are going to be upset by this statement, but this is a liquidity cycle world, and Bitcoin lives inside of that liquidity cycle world. You can see here, whenever we get a cross over on the liquidity indicator, it coincides with parabolic advances for the price of Bitcoin. The bear markets are triggered by the end or the tightening of the liquidity cycle, and it's a rinse and repeat ever since then. So given that this indicator is now about to tick again to a liquidity increase right around the time when we're expecting to see higher Bitcoin prices, again, this becomes, as far as I can tell, a story comprised entirely of liquidity. It reminds me of this. This is one of my favorite memes in investing. We have the low IQ, the general population, and the Jedi mastermind, right? All you need to know is liquidity is increasing, everything's going up. And then in the middle, you have all these million reasons to be bearish, right? Rate hikes are too much. Inflation's going to be sticky, hard landing, soft landing. The list goes on and on and on forever in the middle. But at the far right edge, of course, you have the same deal. This is all a liquidity story. Liquidity is the only thing that matters all the time. Liquidity is increasing. We will continue to see higher asset prices, particularly in risk assets. Another reason I'm so confident that we're going to continue to see liquidity injections and we're going to continue to see printing is because this is the world debt. Look at the state of this. This is only serviceable by printing more money. Remember, the primary reason for inflation, the primary reason for increasing the monetary supply is to make debt more serviceable. So this will be a problem at some point, right? Of course it will. And the only way to start to even begin to service this debt is to print it away. The writing's been on the wall for some time. Here's the dollar continuing to break down. We are on a 99 handle as we speak. Again, if you've been here before, you'll know all the way since back at the top, we've been targeting the mid 90s. I know a lot of people on Twitter have lower downside targets to that. Of course, I'm open to seeing lower downside targets, but for now, let's see if we can get to the mid 90s. And let's see if whilst we do it, we can set new all-time highs for the likes of Bitcoin and the stock market during this final declining phase of the dollar. The downside in the dollar is leading to upside in gold. And as you can see, gold looks to be bull flagging here before potentially another move to the upside. We have the same deal for silver. Silver responding much, much better. So let's see how far we can get this move to move on silver. Not much has changed for the price of Bitcoin. So we'll see what can happen here. Still stuck in this range, still chopping up all of the leverage traders. As it stands, I continue to remain patiently on the sides, waiting for either a decline to buy a reversal on or a breakout above the top of this range, in which case we will be going long here. Ethereum still kind of doing a whole heap of nothing. That's fine. And notice how XRP still in consolidation mode. So anything could happen here as well. That's anybody's guess. But my base case is that we will see some consolidation before another leg higher. That, of course, is to be determined. And the last couple of things I want to point out is it's earnings week this week. We've got Tesla reporting on Wednesday. We've got Apple reporting on Thursday. And for the members only setups, we have also got all of those 4 stocks reporting this week. So it's going to be interesting. It's going to be really interesting to see if we can get earnings above or below expectations. Of course, the market is likely going to react quite violently to these earnings, as it always does. Gaps up and down are both possible. So it's important to know your levels. It's important to respect risk. And it's important to be aware that gaps, both to the upside and to the downside, are commonplace during earnings week. So trade safe out there. If you want to see the full weekend's analysis and deep dive video, then make sure you go back and check the video I put out over the weekend. The markets currently have a 96.1% chance that we see a 25 basis point hike. So overall, I don't think this is going to be too bearish for the market. And the reason I say that is this is all but priced in already, right? This is so one-sided that this is essentially already priced in. And therefore, even if they do hike by 25 basis points, it's unlikely to catalyze any surprise moves. And I also think this sets us up for surprise bullish action out of the equities and the risk assets. And that's because assuming the Fed comes out and does a surprise pause, assuming it moves to data dependent and decides we're going to continue to keep the pause, to hold at pausing the rate hikes for now and see what inflation looks like next month. If we were to get that scenario, then of course this will give the market space to rally even further. I do think the stock market is a little bit stretched in the meantime, as I said over the weekend's video. So we've got to get through earnings this week, and then all of our attention and focus can be on this rate hike and FOMC at the end of the month. Overall, I think things look okay, as I said in the weekend's analysis video. Other than that, welcome to Monday. I hope you're doing well. I hope you're as excited for this week as I am. And in the meantime, take care of yourselves. All the best from me. Until next time. Cheers. Bye.